Wall Street firms reportedly pulled back around $5 billion in crypto exposure, with the major institutions reducing MicroStrategy or strategy positions.
The $5 billion pullback that you're mentioning, I mean, it is real, but again, as mentioned in the previous question answer session, context matters. Really, context matters. So, in my view, this is primarily exposure reduction through leveraged vehicles and derivative products. It was not, abandonment of digital assets. Nobody's like fleeing in this context. So strategy or MicroStrategy, traditional asset managers who held MSTR equity or stocks as a way of indirect Bitcoin exposure, they got hit with equity volatility because, as mentioned already, there were pullbacks. And then on top of it, you had the leverage risk. So in a way, it was like doubled. The effects or the outcomes were doubled. So to me, it says that in a way, institutional adoption is maturing, is differentiating. The first wave was like get exposure however you can. For example, if you remember grayscale premiums, then Michael Saylor's strategy stock, then you have futures, then whatever worked. But I dare to say that this era, this approach might be over. The pullback in leverage exposure is actually very healthy for long-term adoption. So it removes that short-term, unstable, highly speculative capital allocations. I think that I have how to put it in another way. That for me, the institutional adoption is not something that is linear. It comes in waves. Each wave has different than the previous wave. So the first wave was, let's say, exploration and opportunism. You start, take a look into Bitcoin and then understand Bitcoin and get exposure to Bitcoin. Then you start learning and assessing other opportunities beyond Bitcoin. Then you get exposure. And in this context, I would say, exploration and opportunism. But the second wave is, in my view, institutionalization of infrastructure. So I think that is the wave that we are currently in right now.